Hey guys, so I decided to make a part two because I realized I could go a little bit more in depth on why specifically I only use trend lines and why I only use key levels. And I kind of wanted to take out all of what the the guesswork and actually focus on the pattern. One thing I know is that in order to see these patterns, in order to actually see what the market is doing, we have to recognize what patterns we're looking for and why. So I made this example because I wanted to show like how the market isn't always perfect. So let's just get right into it. I don't want to over explain. So the reason, starting with my trend lines, the reason I use trend lines is the same thing as support and resistance. So starting with an uptrend. So uptrend is basically a market where buyers are in control, prices consistently making higher highs and higher lows. So this previous high or this high is higher than this previous high, and this low is higher than this previous low. So once again, it's made up of higher highs and higher lows. Higher highs and higher lows. Okay? That's the first thing. So when we are making our trend lines, we are connecting every higher low. That is why the trend line is at the bottom. We are connecting the previous high to the next previous high, or the previous low to the next previous. We're connecting the previous low to the higher low, then to the next higher low, and to the next higher low. Sometimes we have lows that won't come back to the trend line or won't hit the trend line exactly, but eventually it finds its way back until it is broken. And if it's broken, that means the sellers have stepped in control and have created, sorry guys. That means the sellers have stepped in and broken this trend line. This means this trend line is no longer respected. Okay? So that's how it would look on an uptrend. On a downtrend. Downtrend is we have a high, we have a low, we have a lower high because this low is lower than this previous low. This high is lower than this previous high, and then we have a lower low because this low is lower than this previous low. So in a downtrend, we have lower highs and lower lows. Lower highs and lower lows. So, with that being said, when we are in a downtrend and we are making our trend line, we are connecting the highs. We're connecting this high to this lower high, to the next lower high, then to the next lower high, and to the next lower high, until eventually buyers step in. Until eventually buyers step in and they create a higher high. Because now this high is no longer lower than, it is now higher than this previous high. That means the trend line is now broken, and that means it's no longer respected. Just like that. And then the last example is the last example is a consolidating or a ranging market. So in this market, price is going up, right? Then when we look at this, we now see currently price is going down. So that's why I have two trend lines, because in one area price is going up, but in another area price is going down. You'll hear terms called like, price is squeezing, because that means price is now starting to bounce in between. Price is now starting to bounce in between these two levels. This, which is saying price is making lower highs, but it's also making higher highs. Now we wait for the break. Price could either break this trend line to the upside, or price can, these lines aren't perfect, but price can break this trend line to the downside. So that's all we're looking for. Price can either break this trend line to the upside or the downside because price is squeezing. We don't know because overall price is consolidating. It's starting to squeeze. That's when you'll see I have two trend lines. So yeah, that's the trend lines. Now I'm gonna get into key levels. Okay, so now for key levels. So key levels is pretty much the same thing as the trend lines, but they're horizontal. They still act as support and resistance, just like the trend lines. The trend lines, for example, on the buys, this is acting as a support. This is acting as a ceiling. And then we have both a support and a ceiling. So the key levels work the same way, except now it's horizontal. So for key levels, we are looking for areas where price consolidated. Again, we're looking horizontal, so left to right. So what that would look like is I'm looking for areas where price consolidated. So in an uptrend, well, it really doesn't matter the trend. I am just going to show you in different trends. So in an uptrend, this one is an uptrend example. I see that price multiple times hit here. That's my key level. Because I know every time price came here, buyer stepped in. Every time price came here, seller stepped in, seller stepped in, seller stepped in, seller stepped in. Finally, price hit this. Price hit this floor. Because remember, on an uptrend, this is acting as a floor, which is a support. Price came back, hit this floor. Buyers broke through this key level. All right. Then, as you can see, we found another area. So that means buyers came in and hit this ceiling. Another area. That's a key level. Why? Because buyers broke through this floor, hit a ceiling, hit an area of resistance. Seller stepped in, tried again, seller stepped in, came back to this floor. Buyer stepped in, broke, retested this now support, because at first it was resistance, but buyers broke through. Buyers came back in, tested this now support. It held, it held, it held, it held, it held, it held. Every time it came, buyer stepped in, came, buyer stepped in. So these are my key levels. That's what that looks like in a buy trend. In a downtrend, why do I make this so complicated? Because why does it look like this? Anyways, we do have an area right here. So, why? Whoa, okay. Right here. I'm so off. Hold on, y'all. Let me get this right. Boom. Okay. This is an area of support. Price came down, buyer stepped in, buyer stepped in, buyer stepped in, buyer stepped in. Found an area of resistance, the ceiling. Seller stepped in and broke through. Because remember, at resistance, so buyers push price up, find an area of resistance, and that means seller stepped in. So seller stepped in right here, broke through this support. Buyers came in, retested this support. It's now resistance. Seller stepped in. Seller stepped in. Boom, we found another area of support. So now we have a key level down here. Why? Because every time sellers brought price here, buyer stepped in, buyer stepped in, buyer stepped in, buyer stepped in, and now boom, sellers was able to break through this floor. That's what key levels are, what it kind of look like in a downtrend. And then in the consolidated market, again, price is squeezing. So for here, I guess I forgot the point because I didn't really make it any real areas of consolidation. But for the sake of this example, I would say here. It's not the best example, honestly. And that's okay, honestly, because once again, this is a consolidated market. So we were looking for a breakout anyways. But it'll look like this. Whether price is going up or down, it'll look like this. Yeah. So we don't even have to use this example. So yeah, that is basically what I'm looking for when it comes to my trend lines and when it comes to my key levels. I'm looking for area of support, which is the floor, and area of resistance, which is the ceiling, by looking for areas of consolidation where price struggled at, where areas where buyers couldn't push price higher or struggled to push price higher, or areas where sellers struggled to push price lower. That's what I'm looking for. So when we go back to our chart, and we are going to start again on a blank chart, now we can kind of understand what exactly I'm looking for when I look at these markets. So let's do YM, another blank chart. So another example. Is this a good example? Because, oh, okay, there it is. Okay, so this is a great example, actually. I'm on my weekly time frame. I'm going to start with my trend line overall. So overall, this is the lowest price has been, and this is the last respected higher low. So price is currently, not currently, but overall on an uptrend. Overall. I'll make it thicker so y'all can see it. Okay? But once again, price hasn't came back to this. Since then, price has not came back to this trend line. So I'm going to add another one because we're getting more current data. So I add it here because that's the last lower high according to the weekly. I meant higher low. Sorry, higher low. Boom. So we have our trend lines. That's it. Trend lines are done. Now we're going to go to our key levels. I use the horizontal line. For our key levels on the weekly, I'm going to mark our highest one, our all-time high, which is right here. Let's just keep it red. Not even going to try to confuse nobody. All right, and then our low is here. And then the one that stands out is this, multiple touches. So we want to find the best touch. Let me see. It's this area here. So really, I'm going to just include all of this. Like right there. What is this? Why is it all the way up there? Okay. Like right here. And then it's another one. Like right here. Okay. You can see why. Because we have an all-time high. Price hasn't been able to push above here. Price haven't been able to push below here. And price has been squeezing in here, or had struggled in here for a while until they finally broke out. And as you can see, they came back, retested this original resistance for now support, and continued higher. So we'll do that on the weekly. Then we'll go down to the daily and focus on where price has currently been. We don't need all this data back here. We could just check, but for the most part, we focus on where price is when you're setting up your chart from scratch. So going down to the daily, let's see. I would say here. And you have to keep doing it. So I would suggest like clearing your charts pretty often in the beginning until you can start training your eyes to see the pattern, or just going through different instruments and playing with the key levels and trend lines until you train your eyes to see it. So yes, this one, because as you can see, buyers struggled to push price higher, came in, they did push, but then sellers came back in control, struggled again, and like I said, they did break through, they retested it and continued higher. So that's how that would look. But I also see there was a floor here. And again, it looks close because, again, we're zoomed out on the daily. But if you notice, this is 48,500. It's basically 50,000. So that's a big gap. And don't let it scare you. Don't let it scare you. I would consider this a floor because buyers push price up every time. But sellers struggled to push price lower. They finally did. Then buyers took back control. So as you can see, it was like a ping pong effect here. This lets me know I don't really want to trade in this area. I don't mind. You can. Like I said, it is a big gap, but I just know going deeper inside of it, we will find more areas of support and resistance. Because we can see how much price ping pong in here. Another one, for the most part, this is all I see. I do see one forming here, but zoomed out on this daily, it's not that much data to go back and look. So I can mark it because I know zoomed in, this still is a lot of data from, this is basically June to now. That still is a lot of data, but like I said, it's not like too much to go back and look at. So, but I'll still mark it because it is current and it is still multiple hits. So I'll mark that. And really, this is it. That's all I'm looking for. It's literally the same thing we did here. We're looking for areas of consolidation where price struggle. That's our key levels. For the trend lines, we're looking for areas, or not even, we're connecting higher highs and higher lows. And on downtrend, we're connecting lower highs and lower lows. And then on the consolidated market, we're connecting both. That's literally what we just did. And even as you can see here, we're zoomed in, right? We're zoomed in. This is what? March, April. And as you can see, price hasn't been able to come back to this trend line. Obviously, we don't want it to be going straight up. We do want it to still be diagonal, but we would still follow it because this is still current. So I'll put it right here. Price is still moving on up. This is current. Once this is respected, I delete it. Once the trend line is broken, I delete it. But we want it as current as possible. And that's what it looks like when you're more zoomed in. Still not too many lines. We got 48,500, basically 50,000, 51,000. So it's space in between. Price still has breathing room. Remember, these are daily candles. That's why I do it on here. And even when you zoom in, now look. We have our all-time high. Now I can do it more accurately. As you can see, price was struggling to push price lower. We didn't even get a close under here. Look how accurate this is. Even though I was zoomed out, look how accurate that is. Price struggled. Pushed a little bit, but it did not close. Once it pushes below, we will break this trend line and break this key level. That's what we want to see. That's what we use these for. Same here. Look at this. Price broke. So this was resistance at one point. Then buyers broke resistance, came back, retested it, kept control, then found another area of resistance. They struggled to push price higher, struggled to push price higher, and then they finally pushed price higher. So that lets me know this resistance is now support. Because as you can see, when sellers brought price back down to this level, buyers stepped in. That's how we read it. Then once again, buyers broke through this level of resistance. Then they retested it. Now as support, sellers have not been able to push price below. Every time they came here, buyers stepped in, found a new area of resistance. Price haven't been here since. This is current. Buyers haven't been able to push price above this ceiling. So I could even put a 1 here. Because look, we have 51,600 or 700 and then 53,600. buyers haven't been able to push above here. And it's because we're zoomed in now, so we're in the current. That's what this will look like. What am I doing? What am I doing? I'm like, where's my line? It'll look like that. Because now it shows me buyers haven't been able to push price above here. Every time price comes here, seller stepped in. Seller stepped in. Then price gets here, buyer stepped in. That's what it looks like. So don't get scared of it when it's zoomed out. Don't let that freak you out. Don't let all these lines freak you out. Because again, as a day trader, we are focused on like current price action. I don't care about 2025 and 2024. I mean, obviously I am when there's more data to look at back there, but there isn't. So yeah, just focus on what you can, like where price currently have been. And if it helps you, I fade out the lines that are not important. So right now, for example, just for this example, this line is not that important. I fade it out just so, again, my eyes can focus on where price currently is. Price is currently stuck here, so I'm focused here. I have my trend line. I know the last previous high was here. This was back in July. Well, see, we're July 7th. So this is current. If you wanted to, you could add a trend line. Because again, we are zoomed in. You can add a trend line. Come on, man. Sorry. From this previous high to this lower high. Because again, price is currently here. So this is what we would be focused on currently. Price is here. And then we would watch it like this. So in this example, price is starting to squeeze. Our trend lines are being respected. Price is squeezing within these key level and these trend lines. And that's how you set up your chart. And when you do this, you don't have to do it every day. Like I said, you only do it really that one time and as price continue to move. And as price continue to make higher highs, you mark your new all-time highs and you adjust as you go. So that's it. That's part 2. That's as simple as it gets. If you need to know like more in detail of what support and resistance and supply, demand, key levels, trend lines, I do have separate videos on each of those to go in more details. But for this specific video, I just wanted to focus on the setup and show you like basic examples without all the extra lines and stuff like that. So I really hope this helped. This is the last video I'm making on this. So yeah, bye.